do you want to sit?
And as well, please welcome Angie, head of banking and capital markets at Chainlink. So let's start with a brief introduction of our speakers, and let's start with Angie.
With me first?
Yes.
Okay, sorry. Hi, Angie Walker. I'm running banking and capital markets for Chainlink Labs. It's great to see you all. Been at Chainlink Labs for about a year. We specialize in interoperability and data oracles in Web3 and banking and capital markets. Very dominant Web3 presence, fairly new to banking and capital markets, but we're making big inroads around the financial marketplace.
Thank you, Samantha.
Hi, I'm Samantha. I'm a partner with RWA. We're a global investment firm focused on crypto and digital assets. We run venture strategies, so investing in early stage startups in the space, and also a credit fund. So out of that, we're a lender to crypto companies and a liquidity provider across DeFi.
Thank you, Mona.
Hi, I'm Mona. I founded Enzyme, which is the first and I think largest on-chain asset management protocol today. I also run Avantgarde Finance, which is a regulated on-chain asset manager. We have a couple of regulated on-chain funds, and we also service DAOs and foundations with their crypto-native treasury management.
Thank you. Yeah, so as I mentioned, the real-world assets topic is a quite hot narrative now. The tokenized real-world assets mean the blockchain-based digital tokens that represent either physical or financial assets like cash, commodities, real estate, bonds, credit, equities, intellectual property, artwork, and etc. And tokenized real-world assets represent the ownership as on-chain tokens. And we see that currently everybody talks about tokenized real-world assets. We see different banks making tests with the tokenization. As well, we see Larry Fink, the CEO of BlackRock, the biggest asset manager in the world, saying that tokenization will be the next step after the approval of Bitcoin and Ethereum spot ETFs. He's the proponent of literally every real-world asset will be tokenized. And as well, we see a lot of different predictions, like, for example, by Standard Chartered Bank, that the market size of tokenized real-world asset will reach $30 trillion by 2034. We see as well some bear market predictions by McKinsey that it will be $2 trillion by 2030, and so on. We see that there are examples of different assets to be tokenized. So my first question is how tokenization is reshaping global finance, and what sectors are seeing the most significant impact? So let's start with Angie.
Me first?
Yeah.
So from a Chainlink perspective, what we're seeing big inroads in are tokenization of things like money market funds. There's quite a lot of asset managers and various organizations tokenizing money market funds. That's particularly interesting because, as somebody said in a round table this morning, there's no point in tokenizing something if you're not going to do something with it. So money market funds are a great example. There's a lot of short-dated treasury and cash swilling around in asset management. By tokenizing it, we can start to mobilize that as collateral, and we're doing that cross-chain with a number of our customers. So that's really exciting. I'd say the other area where we're seeing tremendous growth from a tokenization perspective is in regulated stablecoins. Here in the UAE, that's obviously very popular, and we're doing a lot of work here in preparation for licensing next year, but also in other territories like Hong Kong and in other parts of the world where regulated stablecoins are going to very quickly become mainstream. And in fact, we launched with Bank Colombia as part of the WENIA program, a regulated stablecoin in Colombia that's fiat-backed, and we use proof of reserve to continually validate the underlying assets that back the coin and to ensure no over-minting. So I think regulated stablecoins and things like money market funds are going to be very fast-growing, along with other types of assets such as fixed income and real estate.
Thank you. Samantha?
Yeah, so I think Your question started with at what point is it reshaping global finance? I think right now we've seen a lot of opportunities or products brought on chain to serve what's perceived as kind of like crypto entrenched capital. At that point, I don't think it's really changing global finance, right? If it's just to serve these assets that have to live on chain. I think the moment we see users come to access new opportunities and do new things with them, so because like either capital efficiency is better on chain, or features like composability, which you alluded to, right, where they can take an asset and use it to get yield on another DeFi platform, or just at a high level do something that they cannot do in traditional markets. I think that's when we try to, or start to shape finance. And so I think where we're seeing interesting things right now is private credit. And this is because these are areas of traditional markets that are often closed off, right, to many investors and are not transparent. So where blockchains, to me, what they offer is kind of open data, transparency, and automation. If those features can fundamentally like kind of augment your experience with the asset class, then it makes sense. And so I think with private credit, we're seeing cool things where like institutional firms are structuring agreements that are then coded on chain, so individual users can participate at fair and equal terms. That's very different than what exists in traditional markets.
Thank you, Mona.
Yeah, I mean, just to share my perspective, I think for almost the first 10 years in crypto, the conversation has been about how do traditional finance investors get exposure to crypto. And now some of the largest organizations in Web3 organize themselves as DAOs, which manage their treasuries on-chain, don't have bank accounts, don't have any of the kind of centralized services or touch points that you would normally have in a company. So when DeFi yields crashed last year to below treasuries, all of a sudden, large protocols like MakerDAO and other like Arbitrum, etc., started to say, well, hang on a second, we need to earn yield on our stable coins, and we don't have anything available to us. And that's where I think suddenly we found a bit of a product market fit for real world assets, because suddenly they were yielding more than DeFi yields. Now it's the inverse again. DeFi yields have definitely massively outperforming treasuries on stable coins, but the correlation between the two is extremely low. And so for on-chain treasuries and foundations to have access to both, it's really critical in a world where you really want to diversify your assets and construct a portfolio that's going to be resilient against all market conditions.
Thank you, Mona. As mentioned, your tokenization of US treasuries as well became quite a big topic, and we see the biggest asset managers starting offering tokenized money market funds. Like, for example, Franklin Templeton, 1.6 trillion fund already started offering it on Stellar blockchain back in 2021. We see this year BlackRock as well launched the 100 million Beetle money market fund. We have seen the recent news with the UBS as well, launching as well their own US Treasuries tokenized fund. Additionally, we see some tests with Citibank testing tokenization on Avalanche of their private equity funds, and etc. And still the tokenization of stable coins is probably the biggest use case and with the biggest market for the tokenization. Then the next one is private credit, as Samantha mentioned. The next question I would like to discuss is on the challenges, regulatory challenges with the real-world assets. So what are the main challenges facing real-world assets tokenization, and how can they be addressed? Let's start with Mona.
I think the difference between a lot of real-world assets and crypto assets is that most real-world assets are securities, and so there are still very heavy regulatory restrictions on how they can be traded due to securities transfer law. So typically, real-world assets are only tradable within silos, and these silos don't speak to each other, and also because of the transfer restrictions, there's limitations on how composable real-world asset tokens can be with the rest of DeFi. So you cannot use your real-world asset token as collateral in DeFi, or you can and borrow against it, and you cannot sort of maximize the opportunities available due to the blockchain. So I think that's a challenge. So finding a way to aggregate real-world assets and bring these silos together is something that I think is really key to unlock the real potential. And a large part of that is also regulators, rewriting securities transfer law to be, to fit blockchain technology and to really play to the strengths of blockchain technology rather than forcing players to replicate old ways on top of new technology.
Thank you, Mona. Samantha, what are your observations?
Yeah, I think Mona said it really well. With securities laws, you have rules around qualified participants, and you're going to need to KYC more. I think there's an opportunity for the tech to play a role. So things like more inventive approaches to sharing digital credentials, right? So I only need to onboard once, and then maybe I can go across applications and use that in a way that feels seamless, even though it's still verified, can help. And then, something we're thinking about that we'll see is just more data privacy. I'd say compliance coming into focus, right? Because if composability, if you're using one asset across platforms, you're also sharing more about who you are on your transaction trail. I think that's part of the original promise of this technology, but it also carries risks.
Yeah, the privacy issues are important. Angie, what are your thoughts?
Yeah, so just from a service and technology provider, privacy is super important. We've been working for a long time on privacy in Chainlink, and we launched privacy preservation actually at our annual conference literally 4 weeks ago. So we can now provide complete privacy cross-chain between transactions that occur on different chains, whether that's public or private. So I think that's super important to the transaction lifecycle in regulated capital markets. The other thing which I think we will need to demonstrate, and we've been working hard on, is industrialization and resilience in the same way that we would have to do within mainstream capital markets. And if you look at things like MiCA and DORA in particular, it calls out regulatory resilience, and we've been working very hard to make sure anything that we do cross-chain is as resilient as it is within traditional capital markets. I think the regulatory asymmetry between jurisdictions creates arbitrage, of course, and so you're seeing US asset managers tokenized in APAC because the regulatory environment is more conducive, but I think that will normalize over time. But we are working really hard on things like privacy between private and public chains for distribution purposes of assets and transactions.
Thank you. And Mona, you wanted to cover the issues of on-chain management. Can you tell more about that? What currently do you see?
Yeah, I mean, it's linked to aggregation, actually. I think, as one of the sort of on-chain asset management providers in this space, a real challenge is, again, like how to bring crypto and real-world assets in a way together where they're really fungible and people can trade in and out of them easily. And currently, the user experience is challenging because you have to still KYC with every participant. You cannot trade typically outside of this silo for our real-world asset silo. And so I think the future is potentially an on-chain asset management provider aggregating all of the real-world assets with maybe the support of Chainlink providing, or similar oracles providing the pricing mechanisms, and a sort of fund interface where you KYC once potentially, and then you can access all the silos from one place. But it's still early days, and I think there's still a lot of challenges to figure out. I think it would be a real shame not to be able to integrate real-world assets with all the rest of the DeFi composability and all the innovation in the space there. So I'm confident it will happen, but it's still not completely clear how.
Thank you. And institutional adoption is key for the growth. So what initiatives are these organizations undertaking to lead the way in this sector? And let's start with Samantha.
So I think, like a lot of innovation, it's easier in places where you don't have entrenched incumbents. And so when I think of real-world asset, like, it's pretty obvious that this technology can just make finance work a little cheaper, a little faster, get rid of things like transfer agents, maybe make clearing systems less clunky. But all of that infrastructure, particularly, I don't know, in the States, in Western markets, has people who benefit from kind of how it's been laid out. So I think there's a reason, at least in our portfolio, when I look at early stage projects, that touch kind of real world asset in different ways. So whether it's the KYC sharing or actual issuance or like loan origination on chain, they are having more traction in places where financial infrastructure is a little less entrenched. So here, like in UAE, we have some interesting startups that have LOIs with big enterprises that are willing to innovate. And I think this is kind of akin to what you see in telecoms, or other kind of core infrastructure areas where those that maybe have been further back are looking for things to leapfrog.
Thank you. And Angie, Chainlink cooperates with the leading financial institutions and makes tests with the SWIFT and different biggest banks. So from your side, can you tell what do you see from the side of those organizations and what efforts do they undertake to make the adoption of real-world tokenized real-world assets?
Sure. So a few examples of recent innovations within the existing institutional participants. So if you look at Guardian, so we did some really interesting work with Guardian during MAS Guardian, showcasing at Singapore FinTech with UBS and SBI. We collaborated with them to build a digital transfer agent smart contract and demonstrated that Singapore FinTech. I mean, that's pretty transformational in that we can drive the entire subscription redemption process from a smart contract. And then we went on with UBS and SWIFT to show how we could then facilitate from the smart contract the triggering of the payments associated with the subscription and redemption process. Super important. I would say also the work we've done with SWIFT is very significant around leveraging their existing infrastructure, their existing PKI infrastructure, which is phenomenal, to be able to facilitate full blockchain DVP type transactions using the MT500 and ISO messaging protocols so that people who want to interact with each other can do so using the SWIFT infrastructure and network. And then Bank Colombia is also very important because we obviously worked with them and we're working with DREX on the trade finance program and HKMA to facilitate full triggering of payments around trade finance and things like e-bill of lading. So I think there are absolute material innovations that are occurring both cross-chain and between chains and traditional market infrastructures that drive significant adoption of digital assets and digitalization of existing assets and life cycles within regulated capital markets that are really starting to show the transition into the new world.
Yeah, thank you, Andrew. We are quite still early with tokenized real-world assets, and according to DeFi Llama, this market size is only 8 billion currently on chain, besides the stable coins. And so let's see what will happen in the next 5-10 years, and whether we will see the trillions of real-world assets tokenized. Thank you for the great discussion, Angie, Samantha, and Mona.
Thank you.